Welcome to another trade recap where I'm day trading S&P futures on an Apex evaluation account. Apex is currently having a huge winter sale where all Apex evaluation accounts are 80% off the first month and 80% off all recurring months. You can take advantage of this huge discount by clicking my affiliate link in the description and using my coupon code at checkout. This was actually an after-hours trade Thursday evening, but if I had taken a loss here, I would not have been able to trade at all on Friday, per my risk rules, because the futures trading day goes from 6 p.m. Eastern to 5 p.m. Eastern the following day. Anyway, I go long when I see price close the 5-minute fair value gap from the previous trading session and retrace into a newly formed 5-minute fair value gap after a market structure shift. Since this was after hours, there was very low liquidity and price was moving very slowly, so I let the trade run while I took care of other things. I checked back in after about an hour and saw that price had gotten close to my target and formed another bullish fair value gap on the way up and was now retracing back down, and I decided to add another contract inside this new fair value gap. I raised my stop loss up so that the maximum risk was about $300. I know that technically this is above the $250 max risk per my rules, but I figured this was close enough, and I wanted to allow the bullish order block enough room to act as support. Since this was now bigger size, I also lowered my take profit level a little, while maintaining above a 1-to-1 reward to risk ratio. After about another hour, I checked back in and was happy to see that price did bounce off that bullish order block and hit my profit target. Felt good to finally snap my losing streak, as I had taken 3 straight red days by this point. So this is another great ICT setup. Price rejects hard out of a 5-minute fair value gap, shifts market structure on the 1-minute chart, and forms another 5-minute fair value gap on the way down. When price retraces back up into this displacement range, I go short. I had extra short confluence from a bearish AD divergence, and the overall higher timeframe market structure was also bearish. I set a profit target right at this micro gap I noticed, which is a gap between the close of a previous candle and the open of the following candle. These gaps can be potential price imbalances that pricing algorithms are drawn to in order to resolve that imbalance. And this is exactly what ends up happening here. After my short entry, price heads straight for this micro gap and perfectly fills it before retracing all the way back up. I've been unlucky with some of my trades the past few days where price barely misses my target before reversing to stop me out, but this time, price perfectly hits my target before reversing. So I think over the long term, my lucky and unlucky moments should ultimately balance out. So I hadn't hit my 1-loss limit yet, but after booking these 2 big wins, I decided to stop trading as I wanted to go into the weekend on a high note. With today's trades, my evaluation account is back to all-time highs, sitting at 51,807. Taking 3 red days in a row was a little discouraging, but in just 2 trades I made back all these losses and more. This shows how important it is to keep your reward to risk ratios above 1-to-1 if you want to maintain long-term profitability. I've also been tracking my cumulative win rate throughout this entire evaluation account to try to determine what my win probability is with this setup. It's currently at 58%, which is honestly a little lower than I expected, but I still only have a small sample size of 24 trades so far. We'll be curious to see how this win percentage changes as I continue to add more data points. In other news, I have an unfortunate update on my volatility strategy that I've been using to instantly pass Apex evaluations using high volatility news events such as CPI and FOMC. As of December 2022, Apex has officially updated their evaluation account rules to prohibit any news trading strategies that rely on pre-news entries for large windfalls. This quite literally defines my volatility strategy to a T, so I'm sad to report that my volatility strategy no longer works, and they will instantly fail your evaluation account if you try it. I don't blame them at all for this rule update, because they understandably don't want people passing evaluations using this loophole. And overall, I think this is a good thing, because it encourages more responsible trading, and the ultimate goal of this channel is to document my journey to becoming a more responsible trader. For transparency purposes, I'm leaving that old volatility strategy video up, and I've made it as clear as possible that it no longer works. As always, thanks for watching. Please leave a thumbs up if you enjoyed, and subscribe so you're notified of the next time I post a trade recap. In the meantime, I'll continue posting daily profit and loss updates in my channel's community tab.